Hello everyone, and welcome to this month's Brisbane Property Market Update, where I'm going to be summarising the events of March 2025. Now, of course, March was an interesting month. We started with Cyclone Alfred, which did impact the confidence of buyers for a very short period of time, but we have very quickly rebounded. And of course, one of the big announcements for Brisbane is the fact that the Olympic Games venues have been finalised, and of course, that's going to really now drive infrastructure development and economic development and jobs in certain precincts around the city. Now, one of the things that I wanted to start with this month is a macro view of what's actually happening here in Brisbane. Now, of course, people are still arriving. When we look at interstate migration by the state, that's Brisbane, or rather Queensland, at the top. You can see we are still receiving more people immigrating to southeast Queensland especially, and this is putting pressure on prices simply because all of these people need a home and they all need to either rent or buy, and this is why we're seeing that demand elevated, or one of the reasons why we're seeing demand elevated. At the same time, the cost to produce brand new house and land packages from a construction perspective has increased significantly. When we look at greenfield developments, between 2020 and 2023, the cost has escalated $330,000 in those outer Brisbane locations. So this is putting a considerable amount of pressure on affordability in these new estates. Of course, the volume of taxes and government charges that go towards brand new constructions have also considerably increased. And we look at a house, for example, greenfield houses, more than 106% has been the increase in government costs between 2019 and 2025. And also for apartment or infill development costs, it has increased 68% between 2019 and 2025 here in Brisbane. Now, of course, this is also one of the reasons why supply has been constrained, because the cost to bring these brand new products to the market has been prohibitive, and buyers simply are seeing more value in the established market. And this is something that is important to understand if you are looking to invest in Brisbane right now. Let's look at some of the data for the month. So total listings decreased slightly throughout the month. So new listings actually declined, but total listings are down very slightly. And we are also down from 12 months ago. So we are a tight supply market. That is the case. Long-term supply is still well below that long-term average, as you can see in this graph. Sales volumes are still above the 12-month average, so 5.5% higher right now than they were 12 months ago. So this is an indication of that ongoing demand. Properties are still transacting at a higher volume than they were 12 months ago here in Brisbane. Looking at that buyer demand, so auction clearance rates in March, they did escalate slightly. And in fact, we had 2 weekends where we saw the highest auction clearance rate on record for the year of 2025. So we've seen some strong buyer activity in that market, and vendors meeting the sellers meeting the buyers' expectations on price. And that's an indication as to why that clearance rate has increased very, very slightly, although we are still seeing on the ground a lot of evidence where there's multiple registered bidders, but sellers are not letting the property go for, and the property is passing in. So that's that differential between buyers' expectations on price and the seller's expectations on price. Days on market, it has actually tightened slightly again, 22 days right now. Last month, that was 24 days, and 12 months ago, we were sitting at 17 days. So the market is moving a little slower than 12 months ago, but it also picked up a little bit between the month of February and March. Looking at dwelling value changes across the month, 0.4% has been the change here in Brisbane. That extrapolates to an annual change of 8.6%. Now, we do prefer to break this down in house values and unit values, so we're going to get more granular later in the presentation. The PropTrack data also confirms house values increased throughout the month of March, or rather dwelling values as a whole. Looking at price growth segmentation here in Brisbane, it continues to be a trend that the more affordable segment of the market is moving at a faster rate of quarterly growth. 2.6% has been the quarterly growth rate in the bottom 25% of property values, and 0.4% has been the quarterly growth rate in the most expensive 25% of property values. So this is dwellings values, so it does incorporate units as well as houses and townhouses. And typically, because the unit market is outperforming the house market, it can skew this price segmentation data to the low end. Looking at 12-month changes in dwelling values, you can see there Brisbane still one of the top 3 performers in terms of annual performance, alongside both Adelaide and Perth. And over the last 3 months, we've actually seen a changing of the guards, if you like. Perth has really fallen away. It has been a top performer over the last over the last 12 months, but quarterly you can see it slipped back down to just 0.2% growth. Darwin, however, has seen an escalation in prices, and Brisbane and Adelaide still performing very well alongside the regional centres compared to that national average. Now let's look at house values. We've got 0.3% price change throughout the month of March. That is up from 0% change in February. So we've started to see that demand shift that little bit more and push those price values up very slightly throughout the month. The gross yield for a house now sitting at 3.5% for all of Greater Brisbane, and median value sitting at $981,474 for a house. Annually, we've seen a 7.5% increase in house values across Greater Brisbane. This is a similar trend to the PropTrack data, where we've seen 8.4% annual price growth in the house market across Brisbane. Looking at unit values, monthly, we've seen a 0.7% change in property values, annually 14.1%. So you can see that difference on a monthly and annual basis in outperformance in the attached dwelling segment of the market. That's that unit market. A median unit in Greater Brisbane will now set you back $694,577,000. And the same trend has been observed by PropTrack data, 0.3% change recorded over the month and 14.8% change recorded over the last 12 months in the unit market. Looking at property value changes on a month-by-month basis, what this graph demonstrates is the really strong price growth performance from early 2023. We've seen the unit market significantly outperform, especially in the last 12 months here in Brisbane, and a lot of that has been driven by affordability. So this graph provides a nice illustration of the monthly growth rates in both segments of the market, but both houses and units, since January 2020. So it's a 5-year snapshot. Now look at the 12-month value changes in each segment of the market. You can see there the light blue segments of the house market and the dark blue are the unit market. So across Brisbane, Adelaide and Perth over the last 12 months, the unit section of the market is outperforming the house section, and you can see there how that compares to other capital cities around the country. Looking at the last quarter, you can see how Brisbane units have really maintained their trajectory in terms of growth ahead of the house market, and that is the same trend across Brisbane, Adelaide and Perth. You can see there the Perth market in the house segment has really fallen away in terms of that 3-month value growth, and yet we've seen other markets, especially Darwin, start to surge ahead. Looking at vacancy rates in Brisbane across the month of February, we did see vacancy rates increase slightly. They're back up to 1.1% citywide. Looking at rent price growth, it's fairly steady in the house market, sitting at 2.9% annual change. And in the unit market, we're sitting at 3.9%. So the rate of growth in rents in the detached dwelling segment of the market has really slowed back down in line with inflation, whereas we're seeing more strength in rental price growth in the attached dwelling segment of the market. That's those units and townhouses, typically in those inner city locations. In terms of our market summary, look, Cyclone Alfred definitely came and went very quickly. There was a lot of uncertainty around that time, but it seems to have had minimal impact here in Brisbane. The Olympic infrastructure, we believe, will contribute to a lot of economic development. There's going to be jobs growth and pressure on the construction industry, potentially further hindering that supply pipeline of new homes, whether they're attached or detached dwellings. So we need to keep that in mind for that long-term performance of the market here in Brisbane. Units and townhouses, look, we do expect these this segment of the market to continue to outperform houses simply because of affordability and also convenience. And we believe the fundamentals simply have not changed in Brisbane. Our city is definitely still poised for the long-term price growth that we have predicted now for many months. If you would like to get in contact, please scan this QR code. There's lots of free resources available through this link, and you also have the opportunity to book a call with our team to discuss your property buying needs here in Brisbane. I hope that's been a beneficial presentation, and we look forward to connecting with you again soon. Thanks so much, and bye for now.